Welcome to the new chapter, that is Accounting for Hire Purchase System. Today, I, Dr. Aarti Mudaliar, the Department of Commerce, Bhopal School of Social Sciences, I'm going to tell you about the accounting treatment in case of hire purchase system. Well, students, let me tell you, this hire purchase system is quite similar to the installment payment system, and both are credit sale or purchase system. Yes, this is a kind of sale where the vendor or the seller is going to sell the assets or the goods to the purchaser on hire basis, that is on credit basis. Well, of course, the payment is not made at the time of purchase itself, whereas it is made at a delayed period of time. So, there are two parties involved in this kind of transaction. One is hire vendor, or we can say the seller, who is going to sell the goods to the purchaser, who will be termed as a hire purchaser. Well, when the goods are transferred, let me tell you that only the possession of the goods is transferred and the right to use gets transferred to the purchaser. We will study about it in detail when we will study the features of the hire purchase system. Well, once the goods have been transferred to the purchaser makes a series of payments. Now, these series of payments are divided into certain installments which can be equal or can be unequal. Now, these installments contains some down payment or the cash down, which is also termed as cash down, that is the immediate payment made at the time of agreement, or you can say at the commencement of the agreement, or right at the time when the goods have been transferred to the possession of the purchaser. So, this down payment does not contain any interest because it is an immediate payment and not a credit period has been taken for this particular payment. For the rest of the payment, definitely some credit period has been allowed by the vendor to the purchaser, and that is why each installment would carry some amount of interest. Of course, for the outstanding amount. Of course, children, we will study about the valuation of the interest and the calculation of installments also in the further part of the video. Now, together this down payment and installments would make the hire purchase price for the hire purchaser and the selling price for the hire vendor or the hire charges. But let me tell you a very unique thing about the hire purchase system, that until the last payment is made by the purchaser to the vendor, the property of the goods doesn't get transferred. Yes, the right of the goods or the good title of the goods will only be transferred from the vendor to the purchaser after the last installment, or you can say as per the agreement all the payments have been received by the vendor. So, there can be various ways of the valuation of hire purchase price. Let me tell you, this is a very important term in this chapter, and that is the hire purchase price. And again you will be asked to calculate this hire purchase price, or you will be required to know how this hire purchase price is valued. So, the very first thing, as I have told you earlier, that it is a price that includes the down payment and various installments. And let me make it very clear that these installments contain the cash price and the amount of interest charged on each installment. The other way of understanding the whole amount of hire purchase price is it constitutes the cost price of the goods. Yes, that is the price of purchase by the vendor, or whatever amount he has invested maybe to manufacture the particular product, the profit added to the cost, and also the interest charged for giving it on credit basis. So, together the cost, profit and interest makes the hire purchase price. It can also be termed as cost plus loading. Now, what is this loading? Well, loading is a combination of profit and interest, that is any extra amount demanded by the vendor from the purchaser. So, together the cost and the loading will comprise hire purchase price. The other way, one more way of understanding hire purchase price would be the cash price and the interest. What is cash price? Well, the cash price for the vendor is the cost price plus profit. That is, he can say the selling price at which he wants to transfer the goods to the purchaser is the cash price for the vendor, and the amount of interest charged for the delayed payment or for the credit period availed by the purchaser is the aggregate amount of hire purchase price. So there can be various ways of evaluating higher purchase price, and let me tell you that this is again a very important term. Now this gives rise to the various terminology involved in this particular chapter. So I think you have already got a clue of the different terms which we are going to discuss now. Number one is hire purchaser. Well, the hire purchaser is the buyer of the goods which can be assets for him, and he is purchasing these goods on hire basis, on credit basis. The second term being the hire vendor. Yes, hire vendor is the owner of the goods or the seller of the goods, and he will be selling these goods to the purchaser on hire basis or credit basis. The third term you will come across is the cash payment. This cash payment is the amount which is charged by the hire vendor for the price of the goods without interest. That is, if the payment is made immediately at the time of purchasing the goods, the entire amount, that is cost plus profit, is called cash payment. The next term is the down payment, also known as cash down or maybe sometimes signing amount. Well, this is the amount which is paid immediately, but let me tell you that it is the part payment of the entire hire purchase price. But this is since made immediately at the time of purchasing or possessing of the goods, then this amount doesn't constitute, or this amount doesn't have the amount of interest. So this is only the cost plus profit calculated by the vendor, but a part payment that does not include interest. Well, the next term is installment. Now the leftover part, that is after making payment of cash down, whatever part of the higher purchase price is left is divided in certain installments. Now these installments can be either equal or can be unequal. So these installments would definitely consist of the cash price and also the interest. Always remember that interest will be calculated on the outstanding amount in the beginning of the year. It is always the rule of valuation of interest which we have studied from all our previous classes. Well, the last term which will come across is the higher purchase price, and I think we have discussed this higher purchase price quite in detail. Now let us understand about some features or the characteristics of this hire purchase system or the hire purchase agreement. The number one being the transfer of possession only. Well, when the goods are sold by the hire vendor to the hire purchaser, it is merely the transfer of possession and not the good title. That is, the property of the goods will be passed on from the vendor to the buyer only when the last payment has been made. So it is only the right to possess and use in the hands of the purchaser. The second feature being the act, the ruling act or the governing act. Well, the act applicable for this hire purchase system is the Hire Purchase Act 1972. It came into force on 1st September 1973. Now the next feature is the credit purchase system. Of course, this is a credit purchase system because the payment, the entire payment is not paid at the time of purchasing the goods. The payment is divided in certain parts and the credit period is availed by the purchaser. Therefore, because of a deferred payment or the delayed payment, it is called a credit purchase system. The next feature is right to terminate. Now the hire purchaser has a right to terminate this particular agreement if he wants to, and mind it, he can terminate this particular agreement at any time in his capacity. The next feature is that delivery is always made at the time of commencement of this agreement. That is, as soon as the agreement is entered into, the delivery of goods has to be given by the vendor to the purchaser, and also the right to use. The next feature is the hire vendor continues to be the owner of the goods. Yes, we have understood it quite many times that the right of the property will not be transferred until and unless the entire payment against these goods have been made to the vendor. Therefore, the ownership or the property of the goods remains with the vendor only till the last payment is made. And the last feature now is each installment consists of partly the cash price or the capital payment and partly the interest amount. So without wasting any time, let us understand the accounting treatment of this hire purchase system. So let me tell you that under accounting system, we need to prepare two books of accounts, that is the books of accounts for the hire purchaser and the books of accounts for the hire vendor. So when we are going to study about the accounting entries in the books of hire purchaser, let me tell you that the hire purchaser can record these transactions with two methods. One, the asset accrual method, and the second one being credit purchase method. Now let us understand about the asset accrual method. Well, as the name itself suggests, it says that the asset will be recorded in the books of the purchaser only when the payment has been made for the principal amount or the capital amount and not the interest. Yes, you have understood right that the payment is to be made against the capital amount, that is the cash price, and also the interest. But the purchaser will record only that much amount as asset against which he is making the payment for the cash price. Alright, so let us understand the accounting entries to be recorded in the books of hire purchaser under asset accrual method. The first entry being made will be for the down payment, if any. Down payment is the immediate payment made at the time of possessing the asset or purchasing the asset, or maybe writing the agreement or commencing the agreement. Well, at the time of down payment, minded, this down payment does not include interest, it is only the part of the cash price. So the entry for the down payment would be asset account debited to cash. Alright, so this will be done with the amount of down payment. Mind it does not include interest, and only with this amount the purchaser is recording the asset as an increase in his books or debit what comes in. And since he is making the payment in cash, then cash account is credited. Now the next entry would be made for the installment made due. Now depending on the agreement, as the installment becomes due, maybe in the end of the year or whatever time has been mentioned in the agreement, accordingly the purchaser has to make the installment due. Now comes the interest part. Now here he has to record this interest as an expense payable. Alright, so this expense will be debited in his books, and along with that asset account will again be debited because he is going to make the payment for the cash price as well, along with the interest in the amount of installment. So with the amount of first installment, the entry would be asset account debited, interest account debited to hire vendor. Now here the hire vendor is credited with the amount of installment, interest is debited with the amount of interest included in this particular installment, and once you deduct the interest from the installment amount, you will get the cash price with which the asset is to be debited. So this is the entry for making the installment due. Now as soon as the installment is made due, definitely the payment would be made. So what shall be the next entry? Of course, it will be hire vendor to cash. Now once the installment has been paid, the purchaser, since is possessing the asset and is also using the asset, he will be charging depreciation on it. Now the question arises, at what amount the depreciation would be charged? Will it be on the installments paid or the down payments made or the hire purchase price or only the cash price? So let me solve this doubt, that the depreciation will always be charged on the cash price. Mind it, depreciation will always be charged on the cash price, not the hire purchase price. Therefore, the purchaser must be aware of the entire cash price and not the hire purchase price only. So therefore, whatever method of depreciation is practiced or as per the accounting policy of the purchaser is there in their books, he has to adopt that particular method of depreciation, be it original cost method or also known as straight line method, or maybe WDV or written down value method or diminishing balance method. So whichever method of depreciation is being followed in the books of hire purchaser, accordingly the depreciation would be allowed per annum on the entire cash price of the goods he is possessing, or the entire amount or the entire cash price of the asset in his possession, and not the part payment which he has made till now, because twice you have debited asset account, once with the down payment and second with the first installment. So in the very first year he will be recording depreciation not with these two asset amount which has been debited, but the entire cash price as a whole. Alright, now since two expenses account have already been recorded in the books of purchaser, which two expenses? Number one, interest included in the installment, and number two, depreciation. Now once the expenses account have already been debited in the books, it has to be transferred to, yes, a nominal account, that is profit and loss account. So to close these two expenses account, that is the depreciation account and interest account, we will pass the entry P&L account debited to interest and depreciation. I repeat, P&L account debit, that is profit and loss account debited to interest and to depreciation, and all the amount of interest charged in the first installment and the depreciation charge for the first year will be transferred together to the profit and loss account at the end of the year. Well, now the same entries, that is after passing the down payment, whatever entries you have passed, that is for making the installment due, for making the payment of installment, for charging depreciation, and the transfer of depreciation and interest to profit and loss account will be made year after year for the time the agreement continues or till the last payment has been made. So I'll repeat, from the next year onwards, that is in the subsequent years, the four entries which you are going to pass will be for the installment due, that is asset account debited, interest account debited to hire vendor. For the payment of installment, hire vendor account debited to cash. For making the depreciation due, the entry would be depreciation account debited to asset, and the transfer of interest and depreciation to profit and loss account will be profit and loss account debited to interest and to depreciation. So for further installments, all these four entries will be recorded back to back. I hope you all have understood the asset accrual method very well. So let us move on to the second method, that is the credit purchase method. This is another method of recording the hire purchase transactions in the books of purchaser. Well, in this case, he is treating the entire purchase as a whole credit purchase, and therefore the entire amount of asset with the cash price will be debited in the books of accounts of the purchaser in one go. Alright, so the very first entry in the books of purchaser would be asset account debited to hire vendor. This is simply the entry of any credit purchase, isn't it? Whenever we purchase any asset on credit basis, we would be crediting the vendor account, being a creditor. Alright, so with the entire cash price of the asset, mind it, the entire cash price of the asset, that is cost price plus profit, alright, which is the selling price of the vendor, and the same amount becomes the purchase price for the purchaser. So we are going to record this very first entry with the entire amount of cash price in the very first go itself, that is asset account debited to hire vendor. Let us take an example. Suppose the cash price of the asset is say 10 lakhs, and this 10 lakh is to be paid say in 4 installments, where the first installment itself is the down payment, and the remaining amount, that is 7,50,000, has to be paid in 3 equal annual installments. Now for the down payment, where we had made the entry in the asset accrual method as the very first entry, that is asset account debited to cash for making the down payment, here we are going to record the entire cash price in the first go itself, and that is asset account debited to hire vendor with 10 lakhs itself. Alright, and as and when the installment becomes due, we will charge interest, or we can say we will make the interest due. So therefore, the first entry is asset account debited to hire vendor, and if the down payment is made, as in the example which I gave, we are making the down payment of 2,50,000. So for making the down payment, now the entry would be hire vendor account debited to cash. Did you understand the difference? In case of asset accrual method, we made the entry asset account debited to cash, whereas in this credit purchase system, we made the entry for the down payment as hire vendor account debited to cash. Why? Because we have already credited hire vendor with the full amount of cash price, and this down payment is a part of the cash price, and therefore now the entry is hire vendor account debited to cash. Now, when the installment becomes due, for the outstanding amount in the hands of the purchaser, definitely the interest would arise. Now, on this amount of interest will be added to the amount of installment. Now, what did I say? What is the amount of installment? It was 2,50,000 as per our example. Alright, 10 lakh divided in 4 parts. First part being the down payment and the rest 3 parts of 2,50,000 being the cash price included in each installment. But on the entire outstanding amount of 7,50,000, the interest would be charged at the given rate for the entire year, right? So this amount of interest has to be made due once the installment becomes due. So if the annual payment is given in the agreement, then at the end of the year, the amount of interest will be recorded in the books of purchaser as interest account debited to hire vendor. Yes, because the interest is expense for the purchaser and it has to be paid to the hire vendor, to the creditor, therefore his account will be credited. Hence the entry is interest account debited to hire vendor. Now remember, you have already credited hire vendor with the entire cash price, and now again you have credited hire vendor with the amount of interest. So when you will make the payment of installment, you have to debit hire vendor with the amount of installment, that is cash price plus interest, and credit cash. So this payment entry is exactly same as in asset accrual method. That is, hire vendor account debited to cash for the payment of installment, which includes cash price and interest. Now, since it is the end of the year and you have already made the payment of installment, the next step in the books of purchaser is charging depreciation on asset. So this entry also is exactly same as in asset accrual method, that is depreciation account debited to asset, and mind it, depreciation is always charged on the cash price of the asset and not on the hire purchase price. The interest and depreciation has already been charged in the books of the purchaser. Then the last thing which is to be done is to transfer these two expenses account to profit and loss account, and therefore the entry would be profit and loss account debited to interest to depreciation. It is a simple entry for the transfer of these two expenses account. So again, the very first entry was to debit the asset account with the entire cash price and credit the hire vendor. As and when the installment becomes due, you will pass the entry for interest due, that is interest account debited to hire vendor. Well, if any down payment has been made, you have already made the entry, that is hire vendor account debited to cash. So henceforth, for the subsequent years, the entries you have to pass under this method, that is credit purchase method, are to make the interest due at the time of installment, that is interest account debited to hire vendor. For the payment of installment, hire vendor account debited to cash. To charge depreciation, depreciation account debited to asset, and to transfer the depreciation and interest to profit and loss account, that is profit and loss account debited to depreciation to interest. So these 4 entries only have to be passed for all the subsequent years henceforth till the last payment has been made and the property right has been transferred from the vendor to the purchaser. That's all for now. In my next video, you will be learning about the accounting entries in the books of the hire vendor.